What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for my own learning and entertainment purposes only. This is not a financial or trading advice. Please trade at your own risk. Now, I want to start off this video by answering some questions. Someone commented, how do I have this US dollar index down here at the bottom of my chart? Well, real easy. I actually have a subscription on TradingView that allows me to have multiple screens on my chart, but I believe the basic one, you can have two screens at a time. All you're going to do to get that screen up is up here at your top, you're going to see right here between like these little back arrow and the forward arrow, right here next to it, it's going to say select layout. You're going to click on that. And pretty much this is the basic layout. And then you could either do it sideways. And then once you click on either side, you can change the pair and stuff like that. I like to do it like this because then it gives me a better view. And then you could see, you could drag them up, you could mess with them, things like that. But that is how you get the US dollar on your chart. If you'd like the US dollar on your chart at the same time that you're looking at the NAS 100 or something like that. So to answer that question, that's how you do that. If you have any other questions regarding that, drop it in the comments down below if there's any more confusion still, and I can clear that up for you. Now, I do want to begin this video by saying, please don't insult me for any mistakes I make while making these videos. I appreciate the criticism, and I take it without allowing it to hurt my pride. Try to perfect my craft, but please don't insult me for just trying to better myself as a student, better myself as a trader. That's all I want to say. Again, thank you for the criticism, but please, let's keep it cool. No reason to bash other students for trying to learn, you know what I'm saying? And with that being said, I wanted to jump into this video because everybody's always asking, can you do the London setup? Can you do an afternoon, the PM setup? So I created a document that I can kind of follow, but it's kind of all in my head in a way. But with this document, I have the NAS 100, S&P 500 2022 AM session model. There is also the NAS 100, S&P 500 PM session model. There's also the Forex 2022 London Killzone model. And then there's also the Forex 2022 New York Killzone model. And then lastly, the ES only ICT Silver Bullet model. So I got all 5 of these models here that I'm going to be going over in this video. I'll give maybe two examples of each model. To begin, we're going to start with NAS 100 or S&P 500. It works for both the 2022 AM session model. Now, we're going to go to NAS 100. I like NAS, so we're going to go to NAS. And you're going to start with your 15-minute chart, okay? Now, we're going to scrunch this up. And we're just going to go back a little bit. So we have no idea what was going on last week or anything like that. Delete everything off of our charts. We'll go to Tuesday. Okay, we'll go to Tuesday. So Tuesday, the specific time we want to trade for this 2022 mentorship model setup is from 8:30 until 12. Okay, that's what time ICT says to delineate your chart. So step 1, delineate your, 9:30. Actually, it's 8:30 what ICT teaches. However, a lot of news gets released at 8:30, so he also refers to the 9:30 as well. So you could do the 8:30 as well as the 9:30. In this one, I'm actually going to do the 9:30. Since I have it written here, I'm going to stick to the rules and everything that I have based here. So 9:30 to 12 is what you want to delineate. Okay, so let's delineate the 9:30, which is right here, to 12. Perfect. And we're going to play price out to that point. Oops. Let's just bring it back a little bit. Now, at this point, you want to identify at the 9:30 open, you want to annotate with a horizontal trend line the 9:30 open price. If we're selling, we want to sell above this price. If we're buying, we want to buy below this price. So to annotate that, this is the 9:30 open. So if we're buying, we want to buy below it. If we're selling, we want to sell above it. So after that, we want to identify liquidity. Directly to the left of 9:30, identify on 5-minute. So on 5-minute, the very first obvious liquidity, a swing high or relative swing highs and swing low or relative swing lows we come to. Wait patiently for price to run either side, the buy side liquidity, which would be the swing high or highs, or sell side liquidity, which would be the swing low or lows. Now, drop you to the 5-minute. Let's just back it up a little bit. Right here, we identify there is some swing high liquidity with these relative swing highs right here. So swing high liquidity up here as well with these relative swing highs too. And then down here, there's some sell side liquidity with these relative swing lows down here. See that? And then if you wanted to group this one in too, it's around the same area. So now we want to wait patiently for price to run either side, the buy side or the sell side. So let's see what happens. So you can see that the sell side actually got ran. Let me just bring it back a couple candles. Right here, boom, it got ran out, okay? Boom, as soon as it gets run out, you want to look for a market structure shift plus displacement. Once price run out liquidity, we will drop from the 5-minute time frame. Now, this is where ICT drives me crazy because this makes no sense. He says you will do a drop down 5-minute, 4-minute, 3-minute, 2-minute, 1-minute. And he specifically says this in his mentorship. And he says, whichever time frame you come to first that has that fair value gap, you use that time frame. So if it happens on the 4-minute, you want to use a 4-minute. If it happens on the 3-minute, you want to use a 3-minute. Let me tell you what's wrong with that. The 1-minute forms first, then the 2-minute forms next, then the 3-minute forms after. So it doesn't go 5, 4, 3, 2, 1. It goes 1, 2, 3, 4, 5. So for this whole video, I'm going to stick only to the 1-minute. I think the 1-minute is, you know, where it's at, what we should specifically, you know, focus on, especially me as a trader. I'm going to focus on the 1-minute because that's kind of contradicting if you ask me. It's very contradicting because it makes no sense. 5, 4, 3, 2, 1, whichever one you come to, you're going to prioritize that higher time frame. But the 1-minute happens before the 2-minute. The 2-minute happens before the 3. So it's too contradicting. Just stick to the 1-minute. And that's my opinion on that. Okay. So I'm going to stick to the 1-minute. So at this moment, I'm going to drop to the 1-minute. Boom. And we are going to look for a market structure shift plus displacement. Now, where is our current market structure shift high? It's going to be this one. If you don't know market structure shift points, if you don't know, excuse me, if you don't know liquidity, if you don't know daily bias, if you don't know, kill zones, if you struggle with any of those, I am not an educator. I am a student. However, I am confident. I understand ICT's concepts correctly enough to help a struggling student clear up any confusion, understand correct market structure shift points, where liquidity resides, what times we want to be trading, what displacement looks like, fair value gaps, the whole nine. That way, so when you watch my videos or ICT's videos, you have a better understanding of what we are referring to when we mention a certain concept. So if you're interested in a possible one-on-one Zoom call where we will go through charts, bring your knowledge up to mine, I'll leave my email in the comments below so you can reach out and we can set that up. I do want you to know before you reach out that I will not clear up any confusion on IPTA, the IPDA, order blocks, Fibonacci, none of that jazz, as I only focus on ICT's 2022 mentorship model and ICT's Silver Bullet model, and I want to focus on keeping it simple. So I also want you to know before you reach out that I do value my time, and that one-on-one Zoom call will not be for free. It will be $50 per hour. I am confident you will benefit from this one-on-one Zoom, so if you'd like to take advantage of the opportunity, email me and we'll set that up. Now, I also want to mention that I also want to mention that a lot of traders, a lot of you students are wanting to do a Discord group or even a Telegram group. If you're interested in that, let me know in the comments down below as well. We could possibly set something up there and we can have a little group where we can conversate, consistently. We can do all of that jazz. And yeah, so with that being said, getting back to the video, this is the correct market structure shift point. So let's see. That's the displacement right there. That's the market structure shift candle right here. So there's a fair value gap right here. Boom. Now we can set our buy limit right here. We can put our stop loss right below the one candle right here. I like to put it below the one candle instead of below the two candle, simply because this can get ran out really easily, especially from my back testing. It gets ran out super easily. Anyways, we could target opposing liquidity. So there's liquidity here on the 1 minute, liquidity here on the 1 minute, or we could target those 5-minute liquidities up there, and it'd be about a 1 to 4 R. Let's see what happens with this trade. Nothing. As you see, look what happened. So we market structure shifted, price didn't even tap our fair value gap. So there was no entry here. There was nothing here. I don't see anything happening here. I apologize, I had a little interruption there. But as you can see, we had that market structure shift, the displacement, the fair value gap, never came back in to tap it. Now, that's just the realistic side of trading. You're not going to have an entry every single day. It's not going to follow your setup every single day the way that you'd hope so. But that's that, you know. If you look though, let's see, 2-minute market structure shift point was right here. It shifted, and there's a fair value gap right here within it. To see if it would have came back down to tap that. Oh, tapped it, but it would have stopped us out too. See, and things happen, you know. It took out liquidity here, and then market structure shift point, market structure shift point, market structure shift point. This was valid market structure shift point. It shifted, created a fair value gap, and it still didn't tap it. So, you know, it doesn't always happen. It doesn't always follow as planned, and you know, that's just the realistic side of trading. So let's go to the next day. Let's see, or since we're already right here, let's go to the PM session, 13:30 to 16:30. These are the times you want to delineate on your chart for the PM session. Okay, now let's just go ahead and skip over 13:30. Boom. So at this point, it's literally the same approach, the same setup, the same concept. You're looking for the liquidity prior to 13:30 to the left of it on the 5-minute. So we have it right here. You can see that it just ran some here, and there's some above here. So since it just ran some, it's possible that it could reject that and start coming down. We'll see though. Now, right here, let's go to the PM session model. Directly to the left, 13:30 on 5-minute, wait for it to be ran. Once price runs out liquidity, we'll drop from the 5-minute down to the 3-minute, 2-minute, 1-minute, like ICT says. But again, I'm sticking to the 1-minute in this video. So we'll drop to the 1-minute. Since it just ran out liquidity, there's a market structure shift point, market structure shift point. This is your valid market structure shift point right here. Let's see, low, low, they're equal lows. So yeah, that's a valid market structure shift point. It shifted structure. This is a nice candle, but it's not really displacing or creating anything crazy. Let's see. Maybe it'll come up, take out more liquidity. Maybe it'll come up higher and take out more there. But you can see here, it actually just market structure shifted here. This is a valid market structure shift point. The wick of this candle's low right here. This is a nice displacing candle. See the next one creating a fair value gap. Boom, it creates the fair value gap there. This is where we would look to take entry. We would take a sell right here, okay? So we would place our sell limit here, and we'd put our stop loss above the 1 candle. And we target opposing liquidity. So there's opposing liquidity right here. We'll go ahead and target that one for now. See if we get tagged in. Nope, we didn't even get tagged in. Didn't get tagged in. It moved away from us. And, you know, you can see it tapped up. Hey, if you would have held that, shoot, that would have been nice. If you kept your position going, it ran out liquidity. ICT says usually whenever it runs out that liquidity, opposing liquidity without tapping you in, you just want to take your entry off the table because at that point liquidity has been ran and you don't really want to be a participant at that point. But let's just say that you didn't and you just kept your entry there. You were like, if it comes back up, I'll hold it. You know what I mean? Well, you would have did that, you held it, you would have been a winner. Beautiful setup right there. In my opinion, that's a beautiful setup. So it's totally how you want to take it as a trader. Do you want to be the trader that takes your trade off after it runs opposing liquidity before it taps you in, or do you want to leave your entry there? You know, it's totally up to you. If you would have left your entry there in this situation, you would have been a winner. So that's how you apply the PM session model. It's literally the same exact thing. Okay. Now, I know I said I was going to go over a couple of setups in this video. However, I don't want this video to be super long. If you guys want me to focus specifically on a specific setup in the next video, I can make a longer video and do specifically just PM session setups, or I can do specifically just AM session setups, things like that. But that's going to be for the AM and the PM session model for the NAS 100 and SPX 500. Now for Forex, you can do it on many different asset classes. I like to use Euro USD. I think Euro USD, GBP USD, GBP JPY, those ones are really great, especially for London session, the London Killzone. But I'm going to use Euro USD for this example. So we're going to go back. Euro USD, we're going to study the London Killzone first, and then we'll study the New York Killzone. Now, London Killzone starts from 2 to 5, and all of this is New York times specifically. So if you don't have New York set up on your charts, you just click the time down here and go to New York. This UTC -4 changes for everyone. Some is UTC -5, others are different. Just look for the New York and click that. So now you are focused on New York's time. We're going to scrunch up the chart and we're going to go somewhere last week to 2 p.m. to 2 a.m. Let's go right over here. This is Wednesday. We'll go to 2 right here on Wednesday. Now, of course, this is random. I have no idea what these markets are going to do, you guys. I'm not looking, you know, on the side or anything like that to see like, oh, this is going to happen. You guys, I'm following a really strict rules-based plan, looking for the specific setup every time, okay? So just so you guys are aware, it's not hindsight. I don't know what these markets are about to do. But again, same thing, approaching on the 5-minute. Once we hit 2, we want to delineate on this one the midnight open price. Okay, so the midnight open price is going to be right here. Now, if we're selling, we want to sell above here. If we're buying, we want to buy below here. Okay. So right here, where's liquidity? We have liquidity down here. And we have liquidity somewhat right here. We also have liquidity somewhat being ran out right here already. So this moment in time, I'm going to drop to the 1-minute. See if there was any opportunity. Nope, there was a market structure shift here. However, there's no fair value gap or anything like that. Let's see if it runs out the sell side liquidity where we could look for a buy. And it did that. And it created the market structure shift point right there. And it just displaced. This is your market structure shift high. This is your displacing candle. Let's see if the next one. No, it didn't really create much of a fair value gap. However, there is still a fair value gap. It's not a very big one, but it's still a fair value gap. You see that? So we can take our buy entry off of that. If price comes back there, we're going to enter a buy. We'll put our stop loss below the 1 candle. It'll be about a 1.3 pip stop loss. And we'll target opposing liquidity up here. It'll be about a 1-4 hour. We're in the trade. And we just got stopped out. It's unfortunate, but that's the realistic side of trading. Now, again, this is where everybody differs as a trader. Would you take this entry because this fair value gap was really small? Some traders wouldn't have taken this entry because the fair value gap was very tiny. Some traders would have taken it. You know, that's where we all differ. And in this situation, if you would have taken it, you would have lost. And, you know, as long as you got good risk management, good money management, it is all good. Losses happen. You just have to accept them, move on from them, learn from them. Okay? Now, in this case, right now it's kind of just consolidating, and you can see it actually just ran out more liquidity right here. Or it actually didn't run out that liquidity. It ran out this liquidity right here. Boom. So it ran out this liquidity low right here. I'm going to delete this one, kind of clean it up a little bit. delete that too. So there's liquidity here, and it just ran out liquidity here. Where's the market structure shift point now? It's going to be right here. Okay, so if it shifts structure there, look for opportunity. It just ran out more liquidity here. Where's the new market structure shift point? It's going to be this black candle's high right here. Let's see what happens. Keeps going. New market structure shift point. After a run of liquidity, create a market structure shift point there. Create a new market structure shift point right here. Now, I'm sure you're wondering why I'm not looking for sells. Well, it's because it's taking out sell side liquidity. So every time it takes out sell side liquidity, we look for a buy. And whenever it takes out buy side liquidity, we look for a sell. You can see it's just running out, sell side liquidity. We should be getting a buy opportunity any moment now. But you see here, there's a market structure shift point. And then it shifted, but it's not displacing. It's not doing none of that. That's a displacement candle. And that's the fair value gap right here. Boom. So a lot of traders would take entry off of this one. Now, since it's a really big fair value gap, I'm gonna put it below this candle. Usually I'll put it below the one candle, but since the second candle is longer than the one candle, I'll put it below the one candle. All right, let's see if we get tapped in. No, nothing. We don't get tapped in. We don't get an opportunity here. However, it did just run out some buy side liquidity, and it's kind of somewhat above the midnight open price. So at this point, we're going to start looking for a sell opportunity. Market structure shift point is down here. Just created a new market structure shift point right here. So if this gets broken to the downside, I'm going to look for a nice sell. There's a new market structure shift point here. Boom. That's a market structure shift. Nice displacing candle. But see, it doesn't really create the fair value gap that well, right here, boom to boom. It's a small little fair value gap, again, some traders differ here. Would you take this entry? Let me know in the comments down below. Again, you guys, I'm still a student myself. If you see that I'm doing something wrong, if I'm applying something wrong, let me know. I take that criticism, I perfect my craft, and I get better as a trader. So let me know down below if you know something I don't. And we didn't get tagged in. We just got tagged in. We just got stopped out. It's unfortunate. Would you have taken this trade? Shoot, I probably wouldn't have, but I'm doing it for the video, Understand that these setups, they happen, but they're not always guaranteed. They don't always hold. They don't always get tapped in. They can be ugly. They don't always set up the same. Understand that whenever you're getting into this, And these markets are very unpredictable, y'all. I know they are. They're very unpredictable. It's very hard to trade these markets, especially in these current trading market conditions. Kind of nuts. But yeah, that's a market structure shift right here after a run of liquidity. This is a market structure shift point here. Now there's a fair value gap right here. Say we took a sell right here, right? Would you take more than one entry in it? And if you lost, would you take another entry? This is where traders differ again. Would you take another entry here, or would you have called it a day? If you got good risk management, maybe you'll take another entry. Let's say that we took an entry here, right? We target opposing liquidity right here. We'll go 1 to 1.5 R. We got tapped in. We're in the trade. And we won. Nice. Beautiful setup. Hit about a 1 to 3 R. A 1 to 4 R, actually. Beautiful setup. Took out all this liquidity here. And that would have been a winner. Now, why did that work? Well, we had to run on liquidity. Boom. We took out some buy side liquidity. Market structure shift point was way down here. We shifted. Here's a fair value gap. Tapped it. Respected it. Boom. Beautiful setup. Beautiful entry. That is how you trade the London kill zone. okay, for the 2022 mentorship model. Now for the AM Killzone, so for the morning session for Forex is going to be, if we go back to the 5-minute, it's going to be from 7 to 10. Now, if y'all are wondering why these times specifically, I don't know. I don't ask questions. I just do what ICT says. ICT has been trading for 30 years. He's a vet. He knows his stuff. And he deems these as kill zones. So 7 to 10, let's go ahead and play it out. Let's get there. Okay, here we are. Now, right here at 7, we're going to look left again. Where's liquidity? We have liquidity right here. Relative equal lows right here. And we have this high right here. All right. We also have a high up here. Just, mark out the levels. Now, at this point, we're going to drop to the 1-minute and we're going to anticipate these lows getting ran out. So this one got ran out. We want to see if it also runs this one out. And it does that. Now we're going to look for a market structure shift. Where's the valid market structure shift point? It's going to be right here on this candle. Boom, boom. This wick right here, that's your valid market structure shift point. This is your new market structure shift point right here. Market structure shift point here. There's a displacement. There is your market structure shift. Now we can either prioritize this fair value gap here, take entry off of this one, or this next candle can create like a small wick, create a fair value gap here, and we'll take entry off that one. No, so we'll take entry off this one right here, place our buy right here, stop loss right below the one candle right here. It'll be about a 3-pip stop loss, and we're going to target opposing liquidity. Opposing liquidity is way up here around these highs here. So it'd be about a 1 to 3R. Let's see what happens. Okay, we're tagged into our entry. We are in there like swimwear. And take profit smashed. Beautiful 1 to 3R, took out all that liquidity. That is how you apply the 2022 mentorship model to the morning session of Forex. It's literally that simple, you guys. You guys seen it here first. It's literally that simple. Now, again, it's not always going to work. It's not always going to hold. It's not always going to be perfect. But when it hits, it freaking hits. So just make sure that your risk management, your money management, all of that is well disciplined and hit these setups. Now this was for Forex, the morning, the London. We did NAS 100 the morning and PM. Now let's look at ICT Silver Bullet. I like the Silver Bullet. I'm new to the Silver Bullet and I've been liking it a lot. Now, what is the Silver Bullet? ICT says this setup happens every single day. They cannot take it or hide it from you. So on ES, this is ES specific. To get ES, you want to just come up here, click on this, type in ES. So just ES, and it's the first one that pops up, CME Mini. You're going to click it. You're going to bring up your chart. Now I have it scrunched up, and I'm going to go back. We want to delineate your 10 and 11 times with a vertical line. So let's go to last week. Okay, let's go to maybe Wednesday, the middle of the week or something. Or let's do Tuesday. So 10 on Tuesday. Let's go right there. Oops, not with the replay tool. All right, right there. Boom. So here is 10 to 11. This is where the setup is going to form out, okay? Now, with this setup, let me play it out a little bit. So, step 1, time you want to delineate it, liquidity on 1 minute. This is also for 30 seconds and 15 seconds. If your trading view goes that low, you can go down to the 30 seconds and 15 seconds. Sometimes the entry setup won't be on the 1 minute. Sometimes it'll be on those ones. So identify and annotate swing lows, highs, relative swing lows, highs. And it's literally the same thing. However, on this one, you're not looking for displacement. You're not looking for a market structure shift. Displacement likely will lead to market structure shifts, but ICT doesn't say specifically look for a market structure shift. And I know someone mentioned that too in a previous video. They're like, why are you assuming that ICT set is referring to a market structure shift when he didn't say that? Well, it's because displacements often lead to market structure shifts. And you can't tell me they don't. It's true, it's a fact. But if we see liquidity right here, we see liquidity down here, you can see that it displaced up, took out liquidity. We want to see it displaced down, boom, it displaced down. At this point, there's fair value gap right there. Waiting on specifically is once it fills a gap and then displaces down again, there it is. It's likely going to create a fair value gap. Now this one is the one that we're going to answer on, okay? So it displaces after a run of liquidity, it'll displace away from there, create likely a fair value gap. It'll tap into that fair value gap, then it'll displace off of that fair value gap again. Now, the reason why I think this setup is pretty solid and we enter off of this one too is because in ICT's 2022 mentorship, if y'all got to the episode where he talks about pyramiding entries, where he will add an entry to a winning position. If you notice here, this, since it filled in a fair value gap, it's considered an intermediate term high, okay? And if that intermediate term high is true, the next run up will form a short-term high, and that short-term high should not violate the intermediate term high. So we'd be looking for a sell opportunity here. Stop loss above the one candle here. Or actually, you do a 5-handle stop loss, sorry. So it's 5 handles here on this specific setup. You target 5 handles, you have a stop loss at 5 handles. So let's see what happens. And it doesn't enter us there, and that's totally fine. You know, it happens. It's part of the trading game, you know? It did take out sell side liquidity. Let's see if it displaces up or something. There's a little displacement. There's a fair value gap there. Let's see if it taps it, displace away. Taps into it again. Yep. Ran out more liquidity. Nope. See, so it didn't really form on the 1 minute here. I didn't see any of the ICT Silver Bullet. And again, I'm new to the Silver Bullet. So if y'all see it and I don't, if y'all think I'm approaching this wrong, let me know, please. I want to get better at this Silver Bullet. The Silver Bullet is quite interesting if you ask me. So, and it's possible that it didn't form on the 1 minute, but it formed on the 30-second or the 15-second time frames. So that's just something to keep in mind. Now, this was Tuesday. Let's just go to Wednesday since there was nothing here. So Wednesday, same times 10 to 11. We'll play it out. Here. Okay, now, this very moment, we have liquidity. There's a lot of liquidity on here, relative equal lows right here, and we have these highs right here. So if price runs either one side out, we can see that price actually wicked both sides. So this is ugly. This might be an ugly setup. But let's see what it does. So it just ran out sell side. Let's see if it displaces up. Consolidating. Okay, so there's displacement. There's a fair value gap right here. Tap it, displace away. Tapped into it. No, instead it ran out liquidity here, displaced down, fair value gap. Now somebody mentioned whenever it's like doing back and forth like this, if it just ran out some sell side and then it runs out buy side, that you don't really want to be looking for the setup. And you know, it makes sense. It really does. Man, this is ugly right now. Why was price so ugly here? I didn't see it here. Let's see. It ran out buy side liquidity right here. Displacement. Here's a fair value gap. Displace away. Now, again, I don't know if I'm approaching this correctly, y'all. Again, I'm still a student. am I supposed to enter on this first displacement, or am I supposed to wait for a second displacement and then look to enter there? Please correct me in the comments down below. Someone, I would highly appreciate it, okay? Let's go to the next one, since there was nothing that I seen here. ICT says that it forms every single day. Now I could have been on the 30-second and 15-second there again, but let's go here. Okay, boom. We are here. Let's drop to the 1 minute right here. Now, it just took out some buy side liquidity. There's sell side liquidity residing down here, relative equal lows. It's also buy side liquidity right here. Let's see what happens. Okay, ran out buy side. Let's see if it displaces downwards. Ran out more buy side. And it's kind of just displacing up. Ran out more buy side right here. Somewhat a displacement down. There's no fair value. There's a fair value gap right here. See if it taps it and then displaces away. Okay, it looks like it tapped it. Boom, tapped it. Let's see it displace away. Okay, there's the displacement. Boom, fair value gap is right here. So it tapped into this fair value gap. Now it's displacing away. Now we want to take our entry off of this one. 5-handle stop and a 5-handle take profit. Boom. Let's see what happens. Nope, nothing. It didn't tap us in or none of that. Took out sell side liquidity right here. Displaced up. Could tap it. Fair value gap right here. See if it displaces away. No, and that's the end of that. So 3 days straight, I didn't see anything. I didn't see no silver bullet. Again, tell me if I'm approaching this wrong, you guys. I may be doing it incorrectly. I want to make sure that, I'm doing it correctly, especially for y'all, especially for me. So please correct me if I'm wrong. Allow me to learn this. I want to learn this. I want to learn the correct approach because ICT says it, but it's not very clear. I'll be honest. Like he hints at it, but for you to find it, it's like, all right, you know what I mean? It's kind of a little discouraging if you can't find it 3 days straight. It's like he says it's there every single day. Why can't I find it? So tell me where I went wrong, please. Let me know in the comments down below. If you thought this video was a banger, I think this video is a banger. Drop a like down below. Subscribe if you aren't already. Comment, let me know what you think. And until next time, Hot Shot out. Thanks for watching.